Yo, what is up you guys, and welcome to another video. My name is Benji, and if you guys happen to be new here, I normally make videos about my dividend investing. This is my dividend investing portfolio that's currently made up of around 70 different companies that all have a few things in common. They all do pay me dividends just for owning shares of these companies, of course, and they all do, in my opinion, have the opportunity to hopefully go up in price over time. This portfolio is a long-term portfolio. This is like a little side project for me that I've been really wanting to get into for a few years now, and I finally implemented this around 30 weeks ago. That's when I started this journey, and I really have been documenting my entire journey right here on YouTube. It's been a pretty fun project for me, but today, in fact, we are going to try something brand new. We're going to do our first options trade. I've looked into options in the past, trading options, and I didn't really understand it at all. I still, to be honest with you guys, am not maybe 1000% understanding of it, but I think I know the basics. I think I know how to sell a basic covered call. So we're going to go through, we're going to buy 100 shares of At&t right now in a minute here, and then we're going to sell our first covered call. So the first step of selling a covered call, we are going to need at least 100 shares of a certain stock because that's the minimum that you can use to buy one contract when trading options. As you guys can see here, clearly At&t is already one of my favorite stocks considering I already own 205 shares of it. My average cost is pretty close to the cost that it's at right now, which is pretty great because the market has been significantly beat up as of recent during this market downturn. And the reason why I want to buy more shares of At&t and use At&t as my first covered call is because of the following reasons. I already own a ton of At&t and I'm looking to hold on to At&t for a long time to come. Again, this portfolio that I'm using right here is a very long-term portfolio, so I'm not really in a rush to get in or out of any of these shares. Also, At&t is pretty close to the 52-week low, and although market conditions are pretty volatile right now, and there is a good chance that we could see, a pretty significant drop here in the future, really any day, any week now with everything that's going on, I still do think that At&t is not going to drop all that much. And if it does drop a few dollars below this later on in the future, I'll just buy more shares and keep dollar cost averaging because At&t is a company that I would like to have make up a lot of my portfolio overall. Also, the current dividend yield at where the price is at for At&t at 7.22% is absolutely great. And as we see here, At&t has been growing the dividend for 35 years. Although again, a lot of companies are suspending or cutting their dividends because of everything that's going on. I'm fully aware of that, but I still think that At&t has a pretty decent balance sheet. I just looked through it a minute ago, and I think that hopefully they'll be able to keep paying out their dividend, at least in the short-term future, as long as things get back to somewhat normal here sometime soon. So now that you guys understand why I want more At&t and why I'm comfortable with adding more to my position with At&t, let's go ahead and right now, before the price goes up any higher, buy 100 shares of At&t. All right, so we're setting a limit price at $29, and let's try to set it at $29.11. That'll probably get filled pretty quickly. So 100 shares, $29.11 for a total of $2,911. Let's review the order and try to buy it. All right, so the order got filled. We executed at $29.10 per share, 100 shares of At&t, bringing my average cost down to $31.01. So now here on the Robinhood app, if you guys go into the settings section, it's pretty easy to find. You guys just have to sign up for the options trading little area. I think it asks you to apply, but I think everyone gets accepted, honestly. So once you sign up for the options portion of Robinhood, that allows you to trade options on any of the stocks that do allow you to trade options for. You'll see this little tab right here where it says trade options, and in this case, trade T options. So let's go ahead and take a look at what this one has. So now a few basics when looking to sell covered calls for shares that you already own. A few reasons why you want to do this is because it does reduce the cost basis of each share technically, because you are earning a premium when you are selling covered calls. Also, in circumstances like I'm in, where I am looking to hold on to At&t for the long run regardless, it's sort of a win-win because there's not really all that much downside to what can happen. So if we go over here and choose an expiration date, let's take a look at what expiration May 15 looks like. So that's around 1 week from now. So we bought At&t, just as you guys saw, for $29.10. So it's going to work as following. If we want, we can choose this option right here, for example, and that's giving us a strike price at $30.50. What this basically means is if you choose to implement this option right here and At&t does hit $30.50, all of your shares will sell at that given strike price. In that case, if that does happen, you'll be paid, of course, the spread from $29.10, which was my average cost per share, and $30.50. So right there per share, that's not a bad profit for a week. As well as, of course, you will get paid an 11 cents per share premium, which is $11 just for implementing the trade to begin with. So once again, for my circumstances, this really does make sense because I want to add a lot more AT&T to my position anyways. I feel like the price isn't probably going to go up that much over the next week. And if it does happen to go up over the next week, then I will make quite a nice little profit. And if it doesn't go up over the next week, what happens is the trade basically goes away and you still get to keep the $11 premium just for implementing the trade. And the way that it works is as you scroll up and move further and further away from the share price into higher strike prices, you're going to earn less of a premium, but you are going to have a higher chance of profit, as you guys can see right here. So now let's talk about my ideal outcome for this situation. I would probably choose, which I'm going to do so here in a second, a strike price of say $30 to $31, something in there. I'll have to see what I want to do for sure. But my ideal outcome would be to basically have AT&T stay below those numbers so that I don't have to even bother selling my shares necessarily, and I'll just earn the premium for implementing this trade. So let's talk about this one, for example. So for a $30 strike price, let's hope that it doesn't hit $30. You're earning $20 over the next week, pretty much for doing nothing besides putting up your shares as a collateral. And that $20 can go against the price, of course, that you paid for the shares. So that's just lowering your cost basis even more. And as a dividend investor, the lower average price that I have, per share of all of the stocks in my portfolio, the better. So again, this is why the selling covered calls is a pretty good option, especially for someone like me. Also, another question I looked into, which is really important to me, of course, is you still do get paid dividends along the way, even when you are trading options. So that's, of course, something I want to add in there. All right, you guys, so let's go ahead and sell our first covered call. So let's do the $30 strike price right here because I have a pretty good feeling that AT&T is not going to pass $30 over the next week. But if it does, then that's okay because I will, of course, make a profit off the selling of the shares, and I will, of course, make the premium as well. So let's go right here and click on this right here, and it's going to ask you to sell a $30 call, expiration 5/15. So again, that's around a week from now, for a total credit of 20 cents per share. So press continue. And then, of course, you have to sell them in contracts, and contracts are 100 shares per contract. So we'll sell one contract of AT&T. So that, of course, is sort of a downside because you do need to have a lot of shares of these different companies to be able to do this. That could be sort of a downside because not all of us have 100 shares of certain companies, of course. And as far as limit price goes, you're going to want to go to the lower limit price if you want this order to get filled right away. So let's go ahead and do a limit price at 19 cents per share. So a total credit of $19 will be paid to you regardless whether this trade implements or not. So you're getting paid $19 just to sort of activate this trade. And of course, again, if it does go past $30 before next week, I'll have to sell the 100 shares and take the profit. And if it doesn't go past $30, then I'll keep my shares and I will, of course, earn my premium for doing so. So let's go ahead and review this order right here. So again, you are agreeing to sell 100 shares of AT&T at $30 on or before May 15th. If you aren't asked to sell T by then you'll keep your collateral and the full $19 credit. It almost seems too good to be true, doesn't it? Let's go ahead and click submit. So my T short call was filled, which is awesome. So this is my first ever options trade. Super, super exciting. So let's see what happens over the next week. Of course, I'll keep you guys updated, but that was my very, very first options trade. So quickly, I want to talk about, of course, the downside of this. So if you are someone like a day trader, or if you're a swing trader and you want to make, the most profit as possible, you're not just a long-term buy and hold forever type of a trader. Some of the downside would, of course, be, let's say that you just, filled this order for 100 shares AT&T at $30 strike price. Well, if AT&T does keep going up and up and up and up over the next week, of course, you don't have the option to make any more profit. Your profit is sort of capped at the option sell price that you implemented. So selling covered calls does have sort of a downside in that aspect because, of course, I am capped at selling these shares at $30. I basically just signed a contract that said if AT&T hits $30 before or on May 15th, I am forced now to sell my 100 shares for $30 instead of $30.50, instead of $31. So if you guys can follow me on that, it's pretty confusing, honestly, but once you understand this, it's sort of actually easy. Basically, you are just capped at the amount of profit you can make because again, we bought the shares at $29.10 and the contract is going to strike at $30. So it's not like we can sell, our shares for $34 and earn all that extra profit. We are going to be capped at $30. So there we have it, you guys. We did in fact just sell our first covered call of AT&T, and hopefully we get this $19 by next week, and hopefully they don't sell. But again, if they do sell at $30, I'll make profit anyways because I did buy the shares at $29.10. That is going to do it for today's video, guys. Thank you so much for being here during my first options trade. Hopefully we have a lot more to come, and hopefully that options trade does pretty well. I mean, it will do pretty well because either way, I want to hold on to AT&T long term regardless. So if it doesn't hit, again, the $30, I'm happy. If it does hit the $30, that's a nice little chunk of profit in my pocket. So either way, I'm really excited about this new method of trading. If you guys want to see more of this kind of thing, make sure to please like this video and subscribe to my channel. I make videos all the time going over my actual portfolio. I show you guys under the hood. I'm very transparent and leave nothing out. All my wins, all my losses. And really, I'm just trying to document my entire journey here on YouTube. Make sure to subscribe. Thank you guys so much as always for watching. I'll see you in the next video.